you are awesomely excited about trading earnings as well. So with Apple coming up, I'm sure you're going to be talking about that on Profit Takeover and Profit Revolution today.
Well, for sure. We've got a bunch of huge earnings coming up this week. Apple, ExxonMobil, Chevron, Microsoft this week, Facebook this week, Amazon this week, and Google this week. So we're talking basically every mega cap outside of Tesla and NVIDIA are reporting this week. Plus Exxon and Chevron, the huge ones in energy. This is the week for earnings, and this is going to set the tone for the next month. So folks, tie yourself onto the horse. Things are going to be bucking. We're going to be trading up and down. But remember, folks, like Kenny said, you want to trade to it, not through it. Trade earnings all the way up until they are going to announce, and then get out, be done with it, and then watch what happens and then react. That's what we're going to do with KO here. The earnings are out. Now we have the opportunity to trade, not the other way around.
What's going on, Monday Morning Live? It's time to talk some cryptocurrencies as we bring in Nick Black. And there's no reason to wait because we're doing it in 5, 4, 3, 2.
Pew, 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 pew. Sorry, I'm signing up for Profit Revolution. I got to touch a couple more keys.
Smart,
Eric.
Wise. Yes. What's up, Nick? How you doing?
Yeah, man. If you want to learn the options market for real,
Yeah.
I just dabble. I dabble in the crypto version of it, which is the easy, super low intellect version of what Mark does. So
Okay.
if you want to really know the ins and outs, you go and listen to Mark. And then you come apply it to the Bitcoin space.
That is
What?
excellent advice. See how these all tie in together? I like what you
Crazy.
did there. You're a wise man, Nick. Very wise.
Pew, pew.
Thank you.
Pew, pew.
What's going on today?
Welcome to, Alternative Wealth Daily Live is what's going on today. It's going to be magical. You're going to, when you're done, your head's going to blow up and unicorns and pastel glimmering goo is just going to come out of your brain
Sounds nice.
as you learn how to buy your next home with crypto. And that the way they're doing it, super cool. I just kind of banged onto this morning, but we've been talking about this a little bit, these uncollateralized loans and under-collateralized lending, because that's the world, right? That's where we need to be to make, like Eric and I were talking. Eric, is there any crypto app that has made your real world life better?
An app.
Like a thing, the killer app. Is there any?
There's nothing that's made like
your life better.
The only app that I use that's helped me with crypto is one that organizes my ins and outs of crypto to keep track, but nothing that's been crazy groundbreaking. No, because I also don't like using things on my phone.
But has anything made your life better?
My life better?
Yeah, like forget crypto. Yeah, maybe you had some more money, but has anything made your actual life better in crypto?
Oh, not yet. We're hoping that that I make some money, and that'll make my life better.
Nothing.
Oh,
Hand puppet said nothing.
we need to make you the hand puppet guy.
Man, we ought to have a separate camera and have hand puppet, and he can come do commentary.
That could be your thing.
No, there's probably a hand puppet society. They'd be like, you're making fun of hand puppeters all over the world. We're gonna hand cancel you. I don't want to get hand canceled. Anyway, we're gonna talk about buying your home. We're gonna talk about Grayscale and them scaling into Europe. What? We're gonna talk about Luna. And some people say it might or might not look like a Ponzi scheme, and that algorithmic stablecoins in general may smell a little bit Ponzi-esque. It's not really a Ponzi scheme, even though it does smell a lot like what a Ponzi scheme looks like. But the difference may be the intent, right? Where a Ponzi scheme, the intent is to defraud, whereas just a poorly created scheme, the outcome is failure. So we'll see. We'll talk about that. We'll do some Q&A, and then we'll have some picks. Eric, where should we start? What would make Eric happy today? I want to make Eric happy.
I'm a happy guy. I'm happy all the time. But how about headlines? And how about this headline right here? Teller facilitates first uncollateralized DeFi mortgage on Austin apartment. This was an extra add-on to today's show, which means, Nick, you must like this story. Why don't you tell us about it?
I do like this story because there's a couple of little things they're doing that make perfect sense. And then you go, yeah, that's how it should be. Yeah, that's how it should be. So here, a homeowner in Texas has heralded the era of on-chain DeFi mortgages after securing a loan in USDC, right? So, and this was over the Polygon network, Matic, right? Remember, we were talking just a few days ago that Matic is actively trying to be a real layer one. They're not kidding. So anyway, this is kind of cool. So USDC stablecoin loan issued over Polygon, I think it was like $500,000, but using nothing but their credit score. This was an uncollateralized, you get nothing, I get a house loan. It was issued by USDC.Homes, a crypto mortgage platform, and it was facilitated by Teller. So Teller is kind of like the intermediary in this. And what are the other intermediaries? Well, they're banks, prime brokers, and the other banks. Those are the intermediaries in the financial system. So if banks lend, economy grow. Banks don't lend, economy recede. 2 quarters in a row, flat or lower GDP, we in a recession. You string that out, we in a depression, right? So this is the kind of thing that needs to happen, I think, to make crypto make sense to people that are not in crypto. Joe Sixpack, first uncollateralized DeFi mortgage loan. Now, for those of you that remember, we had some uncollateralized loan talk out of Harmony One. They're still working on this. These kinds of things make the other ones kind of push harder into this space, right? Because people get loans. They buy cars, they sell cars, they buy homes, sometimes they rent them, whatever. But this touches humans. USDC.Homes is a company that partnered with mortgage lenders and brokers. They facilitate home loans. Right now, it's just home loans. But you can imagine if this works out, then they would extend to even more risky lending services to create or garner more of a return on investment. They have successfully completed their first sale thanks to lending protocol Teller. The company, the crypto mortgage platform, issued its first loan of $500,000 issued on USD stablecoin, which is about 50% collateralized by dollars, which is way better than some of the other stuff we'll talk about later. They did this over the Polygon network. The platform issued the loan through a program that enables crypto holders, and this is the cool part. You can take out an uncollateralized mortgage based solely on your credit score. Now, they have these different tiers, and it'll make sense in a second. Sometimes you have to put a down payment, but your down payment can be crypto, and they don't sell it, and you don't sell it. They stake it. Your staking rewards go towards paying down the loan. So you don't lose your staking rewards. How sweet is that?
Sweet anyway, it is. It sounds sweet.
Yeah, super sweet. USDC.Homes, I guess you could go check this out. They combine the best of traditional lending markets, such as determining eligibility through a borrower's credit score, decentralized financial innovations such as cryptocurrency staking, which helps to pay off the loan. Teller's calling the loan the first unsecured DeFi mortgage because the borrower did not put up any collateral, but secured the loan thanks to his credit score. That's it. So credit comes back in again. You need that credit, bro. So they initiated this loan. They combine on-chain and off-chain data. So crypto mortgages offer a significant advantage for individuals that have a bunch of digital asset. If you have crypto and it's kind of sitting there sloshing around, not doing anything, and you're just in the game to wait, but you're like, wow, I've got X amount of crypto, and I see this cool house that I would like to live in instead of this trailer that I currently live in with this dog, and it's not even my dog, and I don't even know how it got here, and I think it's probably a coyote, and it nibbles on my toes at night. Anyway, maybe I want that house, and I have that crypto, and you can interchange, but you don't have to sell, so there's no tax burden. I think that's the thing that's really awesome is not only do you not sell, but you don't even lose the staking rewards that you might, be able to end up with had you not bought that. So you get your house, you get your crypto, and you get your staking rewards to pay off the mortgage. So you have your cake and you get to eat your cake and you still have your cake. I don't know, you get your cake twice.
I like the sound of that. Sounds
I love
good.
cake.
I like
to eat
cake.
it and still have it.
I like
Yes.
cupcakes better than big cakes, though.
Cupcakes are good because you don't feel, but then when you eat 14 cupcakes, you're the same fat.
That's true. Hey Nick, can I bring in a question from the chat right now regarding this topic?
Wish you would.
I knew you would say that. It's from Steve-O, and he says, so they can't take the home back if they default.
Well, look, if you default on the loan, your crypto is the first line of collateral.
Gotcha.
So if you get the home, now you're building equity in the home, and especially if they debase the currency. So in a sense, you have a cup. Now, look, if a bunch of different things happened, you could get blown up. So let's say your crypto goes to, 0. All right. Well, then your collateral went to 0. And that's like a bespoke two-party repo when one of the collateral, somebody that pledged collateral, if the collateral drops to 0, the bank knocks on the door and says, hey, bro, you got to put up more cash. So you might have to defend the loan with actually money units, right? But as long as you continue to service that debt, and remember, when your collateral starts to deteriorate, there's a thing called forced stabilization, where they take whatever your collateral is and they turn it into stablecoin to protect you from some downside loss. And it's like 30%. So let's say you put up you want to buy a $5 million home, you'd probably have to put up $1 million on that of crypto, right? And you put $1 million on that, and then it deteriorates to 700,000. They're going to force liquidate into stablecoin. So the maximum loss against your collateral is probably around 30%. Does that make sense?
For that clarification. Yes, it does.
Yeah. Which is a lot. Let's be honest. 30%, it's like it's 3,000 basis points, but whatever. All right. Okay. Crypto mortgages, they have significant advantages. Since traditionally DeFi loans, these decentralized financial loans, they require a fair amount of collateral. This means any individual looking to secure a loan in crypto has to deposit a certain amount. This way, if the price of the particular commodity, like the house, drops, the protocol has the option of cashing out the deposit and avoiding making a loss. So yes, you still have the house. Now, if your collateral dropped and the collateral was no longer servicing the house, that would then become equity against the loan, right? You'd have 700,000 on that minus any payments, well, plus any payments. That would be your collateral. If the market went up, because markets don't ever go down. If the housing market went up, which I don't think that's a good gamble to make right now. My guess is flat to down, but who am I? So if the house was worth more money, you'd have some embedded equity there too. That gets into the kind of nitty gritty of the housing market. And we don't want to do that. The point of all this is to reduce it. You can use crypto as not only the down payment, but you don't really have a down payment. So you don't have a taxable event. You don't sell anything. You transfer crypto into a holding wallet. It then becomes collateral against the loan. And it earns staking rewards, which can go to pay off any debt service. And I think this one was done this loan was a 0% loan, by the way. It was $500,000, zero. And you can go up to 5.5 million at an interest rate of 5.5%. Well, think about the different assets that you stake that grab anywhere from 5 to 7 to 12%. A lot of these stable coins, which is crazy. But anyway, so you're making your debt service plus some just in the staking so they stake your collateral, and then the excess staking rewards go to pay off the note, which is cool because if the climate is right, you'd end up paying very, very little. And you don't have a taxable moment. So anyway, I just thought that was really cool. So that's Teller that's doing that. But assume that a lot of crypto-based lending facilities are going to spring up. And this is a cool thing because this is a zero-sum game, meaning that they're going to all compete in this market. And they're going to melt these rates down to a very competitive environment for you and me. Woo-woo!
Woo. Nice job, Nick. Thank you so much for that. We're going to move on to the next article because we have 3. This one's about Grayscale to expand crypto fund offering to Europe. CEO Michael Sonnenschein said that the firm's European rollout would be done piecemeal due to various regulatory regimes in investor attitudes. So
Yeah.
What does that mean?
I like how they put that caveat and investor attitudes. Yeah, they're like, hey, we're going to roll out. And the French are like, casse pas mes couilles, hein? C'est grosse merde. If you speak French, you laughed. All right. Digital asset manager Grayscale Investments is planning to expand its product offerings into Europe and tap into growing institutional demand for cryptocurrencies in the region. Now, it's interesting because remember, Grayscale is also going to war with the SEC. They may end up suing the SEC. The SEC probably wants that, probably doesn't. You're not going to scare the SEC. It's not like the SEC goes, ugh, we're going to get sued by Grayscale. Clutch your pearls, everyone. They don't care, bro. So Grayscale may have an interesting argument simply saying that we want to take our trust, roll it into a spot ETF because we want to protect investors. And they do have a lot of investors and they own a lot of Bitcoin. And there may be the public greater good argument there. So that's something to keep in the back of your mind. But anyway, this is them expanding their reach, their little tendrils into Europe. And so they're making these offerings in Europe. They're trying to tap into institutional demand in the region. And in an interview with Bloomberg, Sonnenschein said that the company was holding meetings with local partners to discuss how Grayscale's suite of products would be rolled out in the region. The company hasn't made any definitive plans regarding which exchanges and countries would be supported initially, though Grayscale plans to launch pilot tests in several markets across the European Union. Would be interesting if some of those end up looking less like a trust and more like this ETF. Like in different regulatory regimes, you could imagine that they could actually roll out the product they want to roll out in the United States, but in these European nations. So that could be kind of cool. He said, although the EU is unified, we don't view the entire European market as, in fact, one market. You should not, because there's different kind of economic circumstances to each of these, each of the Eurozone nations. Instead, we're going to be very thoughtful, very methodical about each of the financial centers and financial hubs that we ultimately launch in. Yeah, as opposed to the way that Binance does it, where they go in and then regulators go to arrest people. And then CZ erases tweets, erases stuff that he's posted, and then gets on a boat and floats in international water. And he says, you can't catch me, and I'm real rich. All right. So cool. Good for Grayscale. I think it's ultimately good for everybody. Grayscale, they're not a bad company. They're not I've not seen anybody that we should not trust. Grayscale looks like a quality organization with quality people. It kind of checks all the boxes. Now, would I invest in this trust? Well, if you think that they're going to be able to roll this trust into a Bitcoin ETF and it's trading at a discount to NAV to the actual value of Bitcoin, you could do a little math. I think it's still trading at 20+% discount, a straight discount if you were to buy a commensurate amount of Bitcoin. So there's some value there. There's probably, but then again, Bitcoin can go up or down by 20% in 48 hours. So again, you got to be careful how you look at these things. Grayscale works for people that have money stuck in certain financial vehicles that they can't just pull out and buy your own Bitcoin. If you had the choice, you would want to own your own Bitcoin because through Grayscale, you don't own Bitcoin. And also keep in mind that just because they roll their trust into an ETF, even if it's spot delivered, yes, it will be much more accurate to the market. And yes, there'll be the onus of holding Bitcoin and delivery and things like that. You don't really own Bitcoin. You own an ETF. So it's not Bitcoin. In the same way that owning a gold ETF like GLD, you don't own gold. You know who owns your gold, by the way? Eric, who do you think GLD? Who do you think owns that gold? Where's that gold?
Well, if you have it in your safe, you own your gold, Nick.
You do, but if you own GLD, the ETF,
I know what you meant. I don't know. You don't own gold. You do not own gold. No. Only if you have bars in your safe.
Yes. Does anyone in the chat know if you own GLD, who owns that gold? Yes, Demayan, HSBC. One of the dirtiest banks on the planet. I mean, dirty. They, along with these are the dudes that were making the bigger teller windows in Central and South America so that cartel members could just put suitcases directly in. They didn't have to like put the money in bags or whatever. They could just put suitcases in. They could
Body
weigh the
bags.
suitcase, subtract the weight of the suitcase. You deposit your money by the weight of it. They don't even look at it. They weigh it. They're like, Carlos, you're 2 kilos short of money. And Carlos would say, tengo la coche, 5 más kilos. Espérame. And then the guy in the thing is like, gracias, Carlos. Gracias.
How many languages do you know, Nick? You seem to speak many. Very language.
I speak a little of many. Un poco de todo.
That's cool. That's pretty cool.
Es mucho de nada. Es la otra parte de este. Okay, but look, languages, my friend told me, are a weapon.
Why?
He was a colonel in the Croatian army, but I think he blew up a village and he had to escape. He had to escape on a boat filled with heroin. Look, when you hide on a heroin boat to escape whatever fate awaits you for melting a village with invisible napalm mortars, there's more to that story, but that's the actual story.
You've got to
go.
Stories.
He ended up in Beirut working for the Armenian Christians as a security guy and doing anti-sniper operations on top of buildings.
Sounds exciting.
Keep your head down, Belsito. Keep your head down. All
now,
right.
Hey, Nick, I know that you wanted to talk a little bit about Luna. Are you ready to get into that?
Let's do it.
Well, here, I mean, what does this have to do with Luna?
Oh, that's the new, is that their new graph? Oh, wait, sorry, that's Bitconnect. I get those two confused so often.
Why so?
That's the MLM. Well, that's kind of the structure, like a pyramid, kind of what else rhymes with a P? Oh, a Ponzi scheme. And real quick, before I start, Luna, I'm not saying Luna is a Ponzi scheme. I'm saying that all of these stable coins that have no real backing, that are backed by very gooey, volatile, low liquidity assets, are incredibly dangerous, and it tastes like a Ponzi scheme. But the Ponzi scheme is about the intention, right? Like you say, well, people get this wrong. Like, it's a Ponzi scheme. No, something that broke because of poor design doesn't make it a Ponzi scheme. A Ponzi scheme is a fraudulent investment scam promising high rates of return. Oh, wait, they do that. Wait, with little risk to investors. They also do that. Wait, a Ponzi scheme is a fraudulent investing scam which generates returns for early investors with money taken from later investors. Wait, you burned the Luna for the UST. Does meet those criteria. Wait, this is similar. This is more similar to a pyramid scheme in that both are based on using new investor funds to pay the early backers. Weird crap. It does sound like that. Okay, wait. Just because it meets every single qualification for Ponzi scheme, that doesn't mean it's a Ponzi scheme. Right? Both Ponzi schemes and pyramid schemes eventually bottom out when the flood of new investors dries up and there isn't enough money to go around. Then the scheme unravels. Wait, and yes, Ruby, I'm glad you nailed that. Social Security is built the same way. They didn't build Social Security to screw people over. It wasn't a scam. Now, the people that did, math at the Social Security, at the beginning of Social Security, they were like, well, this doesn't work, right? They're like, you would always need more people putting money in for the people at the top to get money out, because otherwise it does not work. That's why there's a difference between a pyramid and a Ponzi. A Ponzi, from the inception, they're planning to screw people over. A pyramid ends up screwing people over, right? There's a lot of MLMs that don't start out bad. They end bad. And so it is what it is. So this isn't a Luna thing. This is in all things that use weird, quagmatic, unprovable whimsy math on one side to support a system and call it safe and sound is very dangerous and looks a lot like a pyramid scheme. So I'm going to give you a little detail, just a little background on how long these things can go, right? Because Eric, do you remember Bitconnect? Does anybody remember Bitconnect?
I remember.
2016?
I remember the name Bitconnect. I was never part of it. I wasn't in this back then, so I know the name. I know the word. Doesn't mean much, though.
So Bitconnect Bitconnect is a company which made its foray into the crypto scene with an initial coin offering in December of 2016. So we're going back a little bit, right? They submitted their position in 2017 as one of the top performing currencies. They were like on CoinMarketCap, this is top 20. Bitconnect boasted a market cap of over 2.6 billion. And this is 2017 when we were right at $1 trillion market cap. So you got to double all these numbers to get an idea. It would put the market cap somewhere around like Matic, where Matic and Near are right now. So you think that's crazy? That's so much money. Yes. Despite their growth and huge user base, they also had a bunch of people on Twitter pumping it, a bunch of people on YouTube pumping it. Oh yeah, just like Do Kwon and Luna. Okay, forget it. That's just a weird similarity. They were guaranteeing investors to earn a fixed percentage. Oh, wait a minute. UST pays 20% guaranteed. You might wonder where it comes. No, it's fine. Because Bitconnect was promising more. So if they promise more, that's a scam. But if they don't promise that much, it's not as much a scam. Okay, wait. Bitconnect, they had a 4-tier investment system based on the sum of your initial deposit. The more you put down, the bigger and faster profits could rake it. That's where people were like, wait a minute. And the whole thing with Bitconnect is they said, we have trading bots. We have algorithms. And they're like, well, what are they? They're like, well, it's proprietary. We can't just show you. They're like, well, what do I do? You give us money, and we just make 1% per day. You're like, I guess that doesn't sound too bad. 1% a day. Yeah, it's a lot. It means that if you put $1,000 in like 3 years, you'd have 50 million. The only people that make that kind of money are congressmen, central bank chiefs like Jerome Powell, who somehow is worth $55 million. Weird in public service that you could make that much money in a job that doesn't pay that much money. Not in 100,000 years does it pay that much money. But yet, Jerome Powell, Richie Rich. Anyway, so what Bitconnect was saying is we do some magical trading, and all they did is just every day you would look at, I didn't have an account, but you'd look at the account, it'd be 1% more and 1% more, and your money was locked in. And this, to be fair, this is not, this was a pure scam from the beginning, an absolute fraud, scam, whatever. And it lasted for 2 years, and still people are not in jail. These things can go on for a long time, even when they're very obvious scams. This, from literally second minute number one, everybody said, well, Bitconnect's a scam. You can't promise that kind of money. But you have to back out a little bit and look at how nonsensical this was and how long it lasted. And then you have to look, when we talk about these kind of algorithmic stablecoins, you have to go, well, wait a minute. This looks, yes, it looks more like Social Security, but when it, when it unwinds, then who's left, who's holding the bag, and how does it work? So to keep up with the demand for Terra's UST stablecoin, Luna tokens are burned to maintain this peg. That's how it works. You got Luna tokens, you got UST. T is the stable coin, UST, it's the stable coin. It's got to be pegged to the dollar, but there's no dollars behind it. Now, this is no different from the Near one. So when I'm talking about Luna, I'm also talking about Near. I'm talking about any of these algorithmic stable coins that use funny money to act as a quasi peg to fiat currency. I'm not going to call it real money because we know that fiat currency is not money, although anything that can be used to settle debt should be kind of considered money, right? That gets into kind of an abstract conversation. But to keep things simple, the supply of Luna, so this is the native token of the Terra blockchain, it fell to an all-time low on Tuesday, so like 2 days ago. Why? Because people are burning the heck out of it, creating UST to get that 20% yield. You say, well, that seems unsustainably high. Yes, it is unsustainably high. You can't pay 20% out of thin air. This is the underwear gnome thing, right? Step 1, steal the underwear. Step 2 and step 3, profit. And you're like, well, what's step 2? They're like, dummy, step 1, steal the underwear. Step 2 and step 3, profit. Well, here, step 1, get UST. Step 2, step 3, 20% a year. 20%? Are you lending? No. Well, are you yield farm? No. Are you doing arbitrage? No. So where does the 20, hush. Do Kwon will do another video where he'll make fun of you and he'll curse a couple times. You'll think he's woke AF. What? So you got to question these things because there's probably safer places to put your money. Anyway, Luna's circulating supply, which is the number of tokens on the market, slid to 346 million, down from 355 million a month earlier and a high of 482 million last November, according to a site called Smart Stake. It's a data tracking platform focusing on the Terra ecosystem, so we know where their brains are at. The liquid supply, which is the number of tokens available on the market that are not locked for staking, dropped to 90 million for the first time ever. Woo woo! And they all pumped this. So like, look, it's exciting times for lunatics. That's what they call them. People that are super excited about Luna. You're a lunatic. Weird. It's almost like they're telling you right to your face you're a dummy. Right? And then you're like, yeah, I'm
sounds
a
like
lunatic.
that.
You're like, yeah, and you're happy. You're like, I want to get a shirt that says I'm a lunatic. Like, dummy, even if it's not a scam, why would you want a t-shirt that tells people you've got money? Come steal my money. All you have to do is take one of garden shears and take my thumb off and you got it. Anyway, a lower supply of Luna has helped to bolster the token's price in cryptocurrency markets. The price is an all-time high of 119 on April 5th. This results in a large price movement for the Luna asset, right? As there's not only significant buying, but also significant supply reduction. Of course, they just print it out of thin and then sell it to you rubes anytime they want to kind of stabilize the token, right? Both forces push the Luna token higher, leading to where we are now. Okay, and you might say, okay, so exactly what are they doing? Like, how exactly does this work? Well, and I'm not telling anyone to buy or sell anything. I'm just telling you, you want to ask yourself, how are they generating yield? How do they generate the 20% they give me? And if everybody's only coming in, if everybody's at the bottom of the pyramid and they're paying in, what happens when some of the people at the top go, enough is enough? Or how about this? What happens when they cut the reward from 20% to about 11 or 12%? Are you just as excited to own this token if it pays 12%? You might also ask, where's the 12% coming from? Hush, dummy, just buy more Luna, okay? The blockchain founded and developed by South Korean firm Terra Labs expanded rapidly from its roots as a crypto payment protocol for online purchases, which is not this, to new ventures in decentralized finance. Why? Because no one understands decentralized finance, and it's really easy to pull the wool over people's eyes and say, listen, it works, bro. It works because I'm rich. You're like, well, he's rich. If he's rich, it clearly works. So they purchased, it was a purchase venture. It was like a payments gateway in DeFi, gaming, and non-fungible tokens, which you didn't hear about it because no one cared about it. In the process, their native Luna token, an algorithmic stablecoin UST, have leapt into the ranks as a top-performing cryptocurrency in 2022. The project also has drawn scrutiny about how sustainable it is. Yes, as it should. Like you guys all know, Eric, you know that Social Security is technically insolvent as of March of this year, right? Like 2 months ago? Last month.
Did I know that? I didn't 100% know that, but I know it wasn't great.
It is actually technically insolvent as of March, as of last month. Social Security is no longer solvent.
That's not good, Nick. That's not good.
No, not if you want to be old.
Right.
If you want to be young forever and never take. As long as you just want to pay into Social Security, it's fine.
Well, the point is to get the payout, right? No? Like, isn't that the plan?
Well, not for us. Not for us,
great.
Eric. Unfortunately, we are going to be financing the silver hairs. And we ourselves, we're gonna have to kind of fend for our own. We're gonna be like Jack, and Social Security, and all of the people receiving it, they're like the girl, and there's like one giant plank that can support like 500 pounds, but yet somehow she just pushes him off. Did anybody think that was a little weird? Like, no, Jack, don't go. Like, he doesn't have to go. There's like 20 feet of space on this piece of wood. You can both survive. And he's like, but I can. She's like, no, Jack, no. Man, they could have both lived.
Titanic
anyway,
reference right there.
Man, if we had the Celine Dion song to play right now, we would have just won the internet. Anyway,
copywritten music.
What if it
can't
sank?
do it.
It didn't sink, RJ. She lived with the diamond didn't sink. You want to lose some weight? Get rid of the diamond. How about? Oh, no. Jack, you fend for yourself. Here, go find another. Another thing. There was only one log to float on. One log. She got it with her big diamond and no one else. Everybody, we all die. Jack makes it. We all die. I mean, Jack doesn't make it. Jack swims till he dies, till the sharks get him. Anyway, Terra's native Luna and algorithmic stablecoin have kind of been very exciting, which is a little bit weird. So the fate of Luna's price is closely linked to UST, as the Luna token is essential to keep the price of Terra's UST anchored to $1. The pricing mechanism to preserve the peg is built using an algorithm. We love algorithms. I'm a big fan of math if the math works, right? I'm not like one of these people that's like, no, the president's been replaced by space aliens and lizard people. Well, that may be the case. I don't believe it. All right, so an incentive for traders. Basically, it uses this algorithm that incentivizes traders to step in and bring the price back to the peg. So all of the behavior in Luna is used to keep this UST pegged to $1. But there's no actual dollars in this system. So what happens is it permanently destroys and creates Luna tokens to balance the supply and the demand for UST. So they can print them out of thin air and destroy them. But if people don't believe in the token in the first place, then there's nothing but funny money and a daisy chain of rubes behind this coin that is pegged to dust. It's actually pegged to enthusiasm. This is an enthusiasm chain. When UST is above $1, so this is basically how it exactly works when people try to explain it. If UST, the stablecoin, is above $1, Luna is burned. They burn Luna to mint more UST, right? So if it's above $1 and you add to the supply, it brings the price down, right? Similarly, if the demand is low for UST and the price falls below $1, the UST is burned. They reduce the UST supply to mint Luna. So you mint more of the whimsy token, right? And the idea is that everybody would want UST. Why would anybody not want it? And then you could just you can stake it and you can get all these rewards. I mean, where do the rewards come from? See the underwear gnomes. But anyway, the demand for UST has exploded, sending the market cap to 18 billion from just 2 billion a year in a year as depositors flocked to the Anchor protocol. And we can go into how that thing got dismantled, or it's had some issues. Anyway, it's a lending and saving project built on Terra that has a market-beating 19.5% annual yield. Is anybody here servicing any 19.5% home loans? No, because those kinds of numbers are what we call in the business predatory debt, right? If credit cards, 19, 20, 21, 23, 24, that's predatory debt. So you just, like, it doesn't take much to dig in and go, wait, just seems very it seems a little bit kind of like it's a little scammy to me, bro. I don't know, dog. In order to get the 20% yield, people need to acquire UST, which involves first acquiring Luna and burning it for UST. And they say, well, this is why Luna is a deflationary asset. No. If UST demand stalls and investors flee the ecosystem, UST will be burned to keep up the price peg, which dilutes the supply of Luna. So you go, wait a minute, these are just two funny money coins. Neither one of them are really, they price it in terms of dollar, but there's no dollars in this whole system. It's just a funny money coin. Ryan Clements of Calgary Law, we talked about this before. He's basically said it's unsustainable. Algorithmic stable coins are inherently unstable. And unless they just gamble with their collateral, like Do Kwon bought a bunch of Bitcoin as collateral. See, this system I'm explaining to you, it already doesn't work. And they started buying Bitcoin. Why? He's got laser eyes and the price of Bitcoin was down and he's gambling, and it is a gamble, that Bitcoin go up. Now, Bitcoin do probably go up, but don't go straight up. It goes up, in kind of a chaotic fashion. These dudes are gambling. Michael Saylor is gambling. He's gambling at MicroStrategy by buying Bitcoin into the treasury. He's gambling by borrowing against his Bitcoin to buy more Bitcoin. Do Kwon at Luna is gambling that Bitcoin will go up and stabilize the collateral side of this flippin' quagmire. These algorithmic stablecoins, they're just very dangerous. That's all. It's very dangerous. Luna's price so far has held up relatively well. Well, that's what the farmer said, right? When his cow died, he said everything was going fine until this morning. That's never happened before. Really? Your cow's never died before. Yeah, I know. Now what? Where's the milk come from? So far, Luna's price has held up well during a time when most cryptocurrencies have struggled because people have that locked in kind of benefit of the UST paying 19.5% over on Anchor. As red hot inflation, if we want to get into the inflation argument, rate hikes, geopolitical uncertainty drive investors to sell riskier assets from stocks to Bitcoin. I don't think that's happening. I don't think people are leaving the equity space, coming in to buy Bitcoin for the safety of Bitcoin. I think that is not at all happening, but it's one person. Since January 1st, Luna has slid by only about 3%, while Bitcoin dropped 18%. And major altcoins such as Solana and Cardano lost about 40%, which is true. A lot of everything's getting punished, right? Because again, we were at all-time highs in November, which is why you have your November cheat sheet, by the way, when you're looking to rebalance. Anyway, so it is what it is. Just be very careful where you put your money. If you're earning yield, look and see how it's being earned. Look and try to figure out, does that make sense or does it not make sense? Madoff would have loved Luna. Yes, he would have loved Bitconnect more, but he would have really loved Luna. He would love all stable coins because there's not much behind them and you can print them out of thin air. I think they printed like 40 billion Tether in like a quarter one time, like a year or two ago. They 40 billion. And they were like, wait a minute. Are you telling us there's $40 billion that got poured into the Tether ecosystem? And the guys like Arthur Hayes and all those other guys that have been indicted, by the way, and are awaiting sentencing, they're like, wait, can you rephrase the question? Yeah, bro, jail. And still no one cares. And so I say all this stuff, Luna will probably do just fine. UST will probably stay pegged because people don't care. They read a couple things on Twitter and that's enough. Anyway, we are big fans of math. Eric, are you a fan of math?
Am I a fan of it? I think it's valuable. Was I great at it in school? No, I wasn't the best. But yes, math is good. Math good.
We're fans of math.
Yeah. Yes.
So I think you guys should also be fans of math. When you see anything, just the general rule is this: anything that pays over 6.5% junk bonds, right? It should be considered in your brain a junk bond until proven otherwise. Now, is there some premium in the crypto space because of the technology? Yeah, maybe that premium is 2, 3, 4%. So maybe you say, okay, 8, 9%, 10% is kind of the line in the sand. And then anything after that, you have to say, where does the money come from? I don't get it. Ask yourself these questions so that you're not sitting on a bag of funny money in a space. And let's be honest, we're in a funny money space. So just be very careful, I guess, is the end of that story. Be very careful. And look, a Ponzi scheme can look a lot like a pyramid scheme, can look a lot like an algorithmic stablecoin. One of them is purely criminal because it's the intent. The intent of Luna, the intent of USN, NEAR, the intent, the one that runs on NEAR, the intent of Dejed is not to defraud. The intent is to get around the traditional system where you have dollars backing, a dollar ancillary asset. But you might go, well, maybe if you have a dollar stablecoin, maybe you should just have dollars somewhere to back the stablecoin. So that's actually, I don't know, a stablecoin. Anyway, that's all I have to say about that.
Well, that'll bring us to our digital asset market review, where you could talk more about what's going on in the current markets. Take us through it, Nick.
It's green as hell. Not for the week, but for the day. So we're up on the Bitcoin. We're up on the Ethereum. Cardano is not getting it done price-wise. Remember, we're not buying any of these things for any other reason than to see what the world looks like 3 to 5 years from now. It doesn't really matter about the 24-hour, although it might make you sleep better. It does not matter. What we're looking at is the 90-day and the 1 year. We're seeing where the discounts are in the assets that we believe in, And in those assets, where we will focus. I am a believer in Bitcoin. Remember, I am starting to adjust down the percentage in my portfolio of Bitcoin, probably to around 25%. That's a lot, by the way. That's a massive amount. And in a mutual fund, you couldn't do that. You couldn't have 25% in one specific asset. There's all sorts of rules. I think 3.5%, something like that. But anyway, so I have a big chunk of the Bitcoin. One could argue that should probably be a little bit smaller. Okay. But one could argue a lot of things, right? One could argue that, Manchester United is not the best team. And I would argue against that, regardless of their recent past performance. All right. So I like Bitcoin. It's down about 29% on the year. I think it's selling at a discount for me, as far as where I value it. Now, the price is always right because that's the price. So where's the value? Bitcoin is a value. Ethereum, I'm uncertain. I think there's a near-term play in Ethereum. I think if you're buying or loading up on Ethereum or holding Ethereum, I think it makes sense to sell into the merge excitement. The merge, I think it's July, August, September, whenever they push it back to. When the merge happens, people are going to be like, heck yeah, man. The merge, man. Heck yeah, man. And then people are going to go, crap, the fees are still high. It still doesn't work all that well. Wait a minute. All these other layer ones are so much better. Yes. And then I think there's going to be some market dominance erosion. So I think Ethereum will be fine. I think price-wise will be fine. It can probably continues to melt up, but not at the same speed as some of these other layer ones. So then I go, okay, where are my next discounts? Cardano down 36, almost 37% in the last year. I think that is a discount. They're going into an upgrade cycle. Probably for the layer ones, the summer is going to be pretty good, pretty red hot. And not this kind of red, but like actually quite fortuitous. There's a lot of scaling upgrades. There's a whole variety of upgrades that are happening with Cardano. So I am very bullish. I am excited. I have a disproportionately large amount of Cardano in my personal portfolio. So I would probably not add Cardano, but I'm definitely not selling the staking rewards to rebalance anywhere else. Matter of fact, I might be transferring other staking rewards back into the Cardano ecosystem. So there we go. Polkadot is the only one that has me uncomfortable. It has me uncomfortable because I don't see them. And again, if we don't see it, it's because they're not communicating. And if they're not communicating, we don't see it. So I don't feel that they're making progress. Now they could say, we're doing tons of stuff. We're launching Parachain. True. But I don't see that. I don't see anything happening super exciting. Now, it's Dr. Gavin Wood. This is the guy that coined the term Web3, right? So he's not a dummy. The team is not a dummy. Now, they do like to party and they like to have fun. I know this. I can't tell you exactly why I know this, but I absolutely, with 100% certainty, know this. They party. And the people at Cardano do not party. Matter of fact, they may have never even been to a party ever, right? Because they work all day and apparently all night. So I'm losing a little bit. I'm less comfortable. I would not be adding, me personally, I'm not adding to Polkadot. Now there is a price where I probably would add. And for me, that's probably $10. $10, I probably start leaning into it again because it is a quality project. Their communication is terrible. So that's, to me, not super comfortable. Dummy coin Shiba. Yes, they did a token burn. Did anyone care? Nah, not really, because it's a stupid project filled with dummies. Now, could they completely change the world? Shocking. Look, when you look at Shiba, just imagine Dogecoin, but run on Ethereum. Well, what could go wrong? Take all the dummies and give them smart contracts. One does not buy Shiba Inu. One might trade Shiba Inu. But one does not buy it. It's not a buy and hold. It's a buy and go bury your head in a corner. Be like the kid on Blair Witch that just looking in the corner waiting to get murdered by whatever the Blair Witch is. Which I don't even know if we know what a Blair Witch is. I just know that if I'm ever camping and there's little sticks that look like people, I know there's a Blair Witch and I want out. I don't want to have anything to do with it. All right. Matic. As we know, Matic is doing some interesting things. They're a part of that project we were talking about, the home loans teller, which uses USDC lent on the Polygon network. Well, this is them. Is this project still a good deal? Well, I compare market cap and I say, could or should they have the market cap of, say, a Polkadot? Well, yeah, people are using Matic 50 times more than they're using Polkadot for anything real world. I mean, it's not even close. So should Matic far surpass Polkadot? In my opinion, yeah, right now. We don't know what the future looks like, but right now, it looks like the people at Polygon, Matic, are doing what they're supposed to do, and they're expanding. Near, really good, really cool. No, Near is not suspect. The stablecoin USN, the algorithmic stablecoin, is set up just basically like Terra Luna, backed by Whimsy. That is stupid, and that will probably not be wildly successful. Some derivation of these stablecoins will succeed, but I think regulators are going to regulate all of them into obsolescence. Look, if you're a government and you're printing your own stablecoin from the government, do you want to compete with all these creeps that print money out of thin air? No, it's unfair. It's like a completely unfair competitive advantage because you're a government and they're like a dude in the Bahamas with a computer going a billion, cash out. So these stable coins are going to get hammered. So I don't really care. I mean, good that Near is doing this stuff, but to me, Near is everything Ethereum wants to be, and Ethereum 2, you just go to Near. It's already there right now. And there's a lot of VCs looking at Near. And remember, we like VCs when we're earlier than them. We don't like them when we're after. So if you can get in as VCs are getting in, VCs are looking at this. They're looking at Polkadot. They're looking at Ethereum, and they're saying, look, way better, way cheaper. Look at the market cap. Well, we can just get our publicists and media people to pump this thing up and get people excited about it. We can be buying it at a discount, which they are, by the way. Probably buying it at $6, $8, $4 a token directly from Near. Some kind of good old boy handshake hookup. If they pump this thing to $100, it still would be, only twice what Ethereum is. So there's all sorts of machinations that could happen. And should Near probably be worth more than Ethereum? Well, no, not right now, because everybody in the NFT space is not using Near. However, give it a little time. It'd be very interesting. All right. Cosmos, probably of all of these ecosystems, it is the easiest to use, the best, the cleanest, the most elegant. They're really digging into DeFi quite handily. People kind of overlook Cosmos, I think, to their detriment. I think it's going to be a really good performer. You never know when they're going to kind of light the fire behind this thing. But in my opinion, Cosmos, it definitely belongs in the bucket. It's down 8.5%. So the cool thing is you look at this and you say, man, I got into crypto a year late. No, you didn't. You still have a lot of opportunity. You can still come into it. You have a time machine right now. You get to go back 1 year and buy quality assets, which is super dope. Algorand, they're incredibly arrogant. They don't feel like they need to communicate with anybody. They're bigger than all of us. They're going to do enterprise deals. Smells a lot like Ripple. Oh yeah. Yeah, that's not turning out so well. Anyway, those are in my opinion, the must-haves, the must-look-ats. You must look at one. If you use Nexo, you want to have some Nexo token because it makes life easy. Arweave for decentralized file storage. Also, Filecoin decentralized file storage. You would have an equal distribution of both. You're getting both at a discount, right? Render, it probably gets a bump to $3, but stay away from it. It's a trade. It's not an investment. Fetch is an investment, but that's an AI investment. And then you have the whole bucket. Fetch, Singularity DAO, AGIX, and NewNet. And then as your super, super cheapy, dummy, terrible project, terrible platform, terrible communication, terrible everything, AI, scammy, flip lottery coin, Matrix AI. Because when the AI space tends to pump, when they all kind of pump together, remember in November, we had a $1.15 fetch. We had a 65, 66 cent AGIX. Singularity DAO was over $6. The good days are not forever behind us. We're just in a lull. Let the Fed do their stupid garbage rate hikes. good, hike, decimate the equity space. This thing is bound to go lower before it goes materially higher. Looks is going to go way lower before it goes higher. Looks is going to get punished. And the only reason I haven't sold everything I have is because I'm on house money and the staking is good. And I'm going to grit my teeth and I'm going to watch this thing go probably to 50 cents. And I'll hate myself for it. And I'll be like, why didn't I watch my own show? But anyway, but after they reprice, give yourself a cushion, 10, 12, 15 days. And then at that point, you could start building. If you believe in looks, if you believe in looks rare, then you could build a position where you knew the staking was going to be more consistent. I'm not sure looks rare gets it done. I'm not sure they ever really compete with OpenSea. I'm not sure. And my one pick is AGIX.
You've been picking AGIX for months now. You're still loving AGIX.
Love it. Yeah, because I keep getting staking rewards. I got so much money in Singularity DAO, free tokens. I got so much in NewNet. I'm getting like 50,000 tokens every quarter of free, bro. Free. My favorite number.
It is.
I love free.
It is.
Let's answer a few questions.
All right, yeah, we have just a few minutes here, but we can get into some of them. Let's start up with this one right here about holding Uniswap from Sentiment. Nick, what's your view on Uniswap if we are currently holding it? I guess people own Uniswap.
Look, hold it in direct proportion to your ability to sleep at night. And this is for any asset. You're not going to learn anything from me other than to ask the kind of questions you need to ask yourself to hold these assets. Okay. So if you're uncomfortable in asking the question, man, should I be holding it? Cut your position down till you don't worry about it. If you're in profit, look, 10X, take 20. If you have a 10X on something, pull some money off the table. If you have a 2 or 3X in something and you're uncomfortable right now and in your estimation, the market's going to go down, sell. Bro, sell or transfer into some stablecoin or transfer into an asset that you're a little bit underweight in your portfolio. You got to sleep at night. No one's going to help you sleep. One of the few services we don't offer at Money Morning Live is sleeping aids. We don't have those. We have a lot of stuff, but not sleeping aids. All right, what else we got?
Oh, we have another one right here from Debbie. Have you heard of Volt Inu? Just Inu being in there scares me a little bit. It was recommended to me by someone in from the start. I got it a couple of days ago and it's already doubled. Would you suggest getting out right now? No, if it's already doubled, sell half your position this second. Now you're on the house's money. And if this dummy coin skyrockets into infinity and beyond, you win. And if it doesn't, guess what? You don't lose nothing. You get a double on anything with a bird, an animal, or a food product, or the word Inu in it. You bloody sell it. Love that. Totally true. Well, Nick, we only have 52 seconds until midday momentum comes up. So why don't we close it up? We already know that AGIX is your pick for the day.
It's my pick. What's your pick, Eric?
I still like Cosmos. It's still, I mean, honestly, everything could be your pick. But as we've learned from the last show, Nick, I need to get a little bit more of a position in Bitcoin as well. So
anybody that has a world's greatest dad mug that you were going to send to Brerick, don't.
No, I'm going to keep that mug for myself. Don't worry.
Just go smash it on the concrete. It'll be better served that way.
I agree.
His mug. Stay out of trouble. Stay in school. Don't do drugs. Don't do anything my poor insolvent drunk strung out on so much meth grandmother wouldn't do. I mean, like she hits all of it all at once. And also don't do anything Eric or Brerick or Brandon wouldn't do. And between all three of them, there's nothing they wouldn't do. Nothing. Pew, pew.